Okay, we are starting the live stream. I missed it yesterday. So, to what we are going to do today is about demand and the supply. Yes, that's our topic today as part of market structure. Okay, we're having an error that YouTube is not receiving enough video. Okay, we're going to manage that's network issues. Okay, let's go back. So we talk about market structure, demand and the supply. Let me remove the custom indicators. I like to use supply and demand indicator. But before you use those, it's always better to know how to go about it manually first. Okay, so this is a live market. So being a live market, like I normally teach, the first thing we are supposed to do is to go to higher time frames. So the higher time frames, you can start with the daily time frame or weekly time frame. Okay, let's start from the weekly time frame. Let's mark out the most important areas. So we're going to mark out the most important areas first of all. Okay, you can give me water, please. So here, okay, we mark it here. Then we can use line charts. When we use line charts, okay, this is bar chart. When we use line chart, it can give us the swings. Okay, this is accurate swing here. So we come here again, we check the other swing. Okay, we have a swing here. This is swing high. This is on weekly. Good. Then we can still draw. We have another swing here. Okay, so let's go to our daily chart to fine tune them. So here we try to, okay, it's accurate. So let's go back to candlestick. This is a candlestick now. At least it has helped us to get the important swing areas so we can fine tune. Okay. Okay. So here I'm using an USD card. So let's go to 4 hours. These are 4 hours. So based on our 4 hours, let's still try to, okay, there's something I want to do here. Okay. Go to that 4 hours. Okay. Great. So this is exactly how it is now. We normally start from the left hand side. We start from the right to the left hand side. So this is my right now. From here I will now go to my left hand side. So to check exactly what is happening. So this trade now, remember, this is on dailies. When the market came down, it tested it here, came down here, found support here. What we call support, another name for support is demand. So this is my demand zone. We call it zone because it is an area. Yes, we are looking for reaction. So from here, it came down and it tested here, move up, came down, tested again, move up, tested again. Then it got here. When it got to this area, when it got to this area, there were rejections. These were rejections until it moved down here. I had to move up and came down. Okay. It couldn't break. Then when it tried to break, it was rejected immediately, which offered an opportunity for a long trade. So it moved here. Finally, it broke here, but it moved down here. It got tested to this area and moved up, but was rejected. Then it moved down. So in between here now, if we are trading on dailies, there's no way we can enter. We must wait for the market to either approach this demand zone or this supply zone. But that is why we have what we call a multiple time frame analysis. So let's go to 4 hours. From 4 hours now, we found out that there has been a lot of reactions here. They just mark a little. Okay, this area. There have been a lot. I took a trade from here today. Made few pips and exited. At least I made them times. I made times 2.5 of my risk. Yes. So let me still go down to 1 hour. Go down to 30 minutes. Then 15 minutes. Look at the trend I took today. After, I will show you the history. I saw what happened here. So when it tested here, it retested it, it moved up. So as soon as it came down again, I entered a trade. Let me open my history to find out the exact place I entered that trade. Okay. Let me go to history. This is a long-term trade I entered during that time. What do you call it? JPY. There was intervention coupled with dollar slump. One bad news to the extent that stop losses were jumped. I want to get okay. Let me get here. I needed to. Oh my God, where is it? Where is it? I'm trying to get my entry where I entered that trade. Okay, custom. I'm looking for today. Yes. Okay, look at this small trade. I just instead of okay, this I entered this trade 1.370 and the time is the actual time here is 2024-08-15. Okay, 1831. Yes, 1831. So let me trace it. That's 1831 or 1830. Okay, this was my entry. Then I exited at 724. Yes. So okay, this my stop loss when I move it to break even at 702. Okay, this is yes. The trade was entered here. Exactly 37. The trade was entered here, and my stop loss. Okay, it's like I used 30 minutes. Good, exactly. It was 30 minutes I used. So 3702. The initial stop loss was 36 points. 1.3694. Yes. So, which was about 2 points, around not less than $3 risk. So I exited the trade here. I exited the trade 37.24.3 somewhere here, but my take profit was 37.44 around these areas. But I didn't want to. There was a trade I was making. There were some losses. Let me show you some losses. That was a wrong trade I made. So I tried to close all of them so that I can start afresh. Okay, this was a wrong trade, a carryover of that during that dollar slump and the intervention. I was managing it because the price action was telling me that it will still, because it is a long-term trade, but I decided to close everything. So as you can see, I closed this one at negative 25.88. Okay, if you subtract the swap, maybe around $21. Okay, this one is negative $6 minus 7. Okay, this one was closed at no loss. So this one was minus 35. Okay, 12 minus 35, which is around 20 something. Okay, this is a trade I made today too, but it wasn't moving anywhere. So I exited at $15. I closed this one because it wasn't going anywhere. Okay, another trade, Euro AUD. Okay, this one is Euro JPY. The same we call it leftover or carryover. So I closed them. So in all, I lost $18. Yes, because losing is part of the game. Losing is part of the business. You don't lose too much. Yes. Make sure, like this $18 is not even up to 0.5 of my account. Is it even up to 0.1? Okay, so that is it. That's how to trade. You see what happened. So this thing, it moves up here. I was waiting for it here. I missed this one here. So when it came back here, I entered immediately. Put my stop loss below here, and it moved. So if I'm a swing trader, I will put my take profit here. And this is where I'm supposed to leave it. But like what I explained earlier on, I told you that I really wanted to start afresh, to close everything and start everything afresh. So that is how it is. If you are using price action, 5 minutes charts, some people use 5 minutes. If you want to make use of 5 minutes, then you combine it with 4 hours or 1 hour. For example now, okay, let's pick 1 hour. If you check here, this is where we have a lot of reactions. The market moved down here in 1 hour using 1 hour chart. Let me zoom in so that you can see very well. It came here, move up, came down here, but no, there's nowhere to enter here because no any goods candle, unless you go down to lower time frames. It moved up here again. So if you find that here has been this area or this zone has been holding good. So having seen all these areas now, we can come down to 5 minutes if you want to play on lower time frame. See what happened here. So when it came down to this area, we now enter, it moved up, then on this retest, we cannot enter on this retest, which is here. So putting our stop loss below this candle or down here if you want to allow some room. Then what's our next swing? Here can be swing, but where we have cluster of swings, this area, we put our third profit here, and which exactly worked. Then it came back again, moved up. This because of particular news. Then it came down here again, pierced it, moves up, came back. Then one can enter here again on this bullish engulfing candle. This bullish engulfing candle here. Remember, we don't enter the first one. Allow the market to retrace back. So here, it retrace down here. Then with this candle now, we can enter. If we miss it here, we wait it. We will now wait for an opportunity to enter here. Exactly. Then what happened? It moved. Our nearest swing highs, these areas, we would have seen one. So that was yesterday. Coming back today, it tested that area again. It tested exactly that area again. So we check the latest swing. Look at the latest swing here. Swing low. Based on these 5 minutes. Between here and here. So wait until the market comes so close to it. But before the movement, we have another movement here. Look at. Okay. This was our entry here. So we can still mark here. So as you can see, the market got here, there was a bullish engulfing. And what happened? It moved all down to, let's check our nearest swing. Okay. Our nearest swing, okay, we have something here. So we still won the trade. But if you can go to 15 minutes more, okay, if you check 15 minutes, after here, after these areas, we have other areas here, but we are not supposed to be greedy. We now hit our target here. From here to here. So the market came down here again. Move up. Look at what happened. We won here. It came down here. Moves up. We won. So this is the one I took. But I took it based on 30 minutes. I used 30 minutes, which is exactly. And I have exited the trade. I traded it on 0.05 because I didn't like the movement of the market. So when the market is not, when you are not all that sure, you reduce your exposure. Yes, I'm supposed to trade with 0.2 minimum, but I wasn't comfortable. I have to reduce my risk. So that's how to do it. Market structure goes with demand and supply zones. So that is it. And remember, we normally make use of our higher time frame first. When we now check the higher time frame, we can like look at here. I used 1 hour to determine my demand area, demand zone. Then have to came down to 5 minutes, all the way to 5 minutes. Yes, came down all the way to 5 minutes. Looking at 15. Okay, yes. Look at it. Exactly. So that's how to do it. We can use 5 minutes to trade, but if you're using 5 minutes, make sure that you have a higher time frame like 1 hour or 30 minutes to mark the zones and trade off from there. So from here now, let me still teach you something. We can still use even 1 minute. So this area, when it came down to this area, you saw it. But this one is for people that are already well experienced, not for everybody. Okay, see what happened here now. If I wanted to trade based on 1 minute and trade off from this zone, all I needed was to just mark, okay. Then when it came down here to around 76 to 61 area, so one can take on retracement here. Stop loss should be below here. Then we target the next swing. Let's go back and check our next swing. Either here, this should be our first target here, or we can target all, then up to this area. But immediately you enter your trade, and your trade makes a significant move. Lock that your stop loss should now be at break even. And when you are putting at break even, you make sure that you lock some profits. Yes. This was my entry. Okay, let me 21. I entered based on 30 minutes. Okay, 37.03 now. Yes, somewhere here. Somewhere around this area. So when it moved up, once it moved up, then stop loss can be at break even. It moved up again, you can now be tracking it. So you now be placing it at this moving it based on the swing. Like look at the swings on this trade now, on this 5 minutes. Here is a swing, here is another swing, here you can put, then it moves and come, then here is another area. So not always we leave markets, we leave our trades overnight. Yes, because there are overnight risk so much. So that's all about it. Let me recap. See how we got our, okay, let me remove all those things. see how we got our demand zone and the supply zones. You can see it now. We mark it on dailies. Then, okay, let me remove. There's something I need to remove again, like Fibonacci. Having done that, so we can't enter a trade here. We wait from here. So if actually you want to enter a trade here, we must check. We go to down to 4 hours. Look at what happened in 4 hours. We can still go down to 1 hour. So from here, this is how we got our entry. Yes. So as we drew our demand zone here, we can now go down to 15 minutes, 30 minutes, or even 5 minutes to make our entry. So that's all about how to draw demand zone and the supply zone. Remember, I made use of line chart so that it will now, it gave me those. Okay, if you look, if we use this, this will give us the arc